we're going to be going through and doing our adjusting entries for discount books. You will notice our directions give us a completed worksheet because that is truly where we are getting our adjustments from. Because this is one of the last steps that we do at the end of the fiscal period is to record our adjusting entries. Now, adjusting entries do not have a source document. So you'll notice when we look at our journal that our source document column here is green, meaning that you can't type something in there because we don't have a source document for it. None of our adjusting or closing entries will have a source document, but we still need to have information on there indicating where did we get this information. So we always start on the very top of our journal with the word adjusting entries, and that would be centered. Excuse me. That takes place for all of our source documents. Now, our adjusting entries are always recorded at the last day of the fiscal period. What is the last day of our fiscal period?
December 31st.
How did you know that? We look at our worksheet. It says for year ended December 31st. So we know this fiscal period ends on December 31st. Not all businesses end on December 31st. Okay, businesses can end their fiscal period whenever they want. So the date for our adjusting entries is going to be December 31st. Now, when I look at my worksheet over here, one of the things that they have in the example of this worksheet that we are not able to do when we do Aplia is you will see to the right to the left of your adjustments that you have letters, like you'll have A, B, C, D, E, F. When you are recording your adjusting entries, you have to record them in correct order. So you'd record A first. You also need to make sure that you put your debit first. So when I'm looking at the top here of my worksheet, I can see that A here is being credited for allowance for uncollectible accounts. When I go down here on the bottom, I can see that my other A is uncollectible accounts expense. So I need to, on my very first line, put in uncollectible accounts expense. And then I'm debiting at $1,500. And an allowance for uncollectible accounts is being credited. Now my B transaction
Can you even read them?
I was going to say I'm having a hard time reading them too. It should be merchandise inventory.
What? That looks like B.
It does look like D.
B, I think store.
Supplies store.
I still can't read.
They did not do a good job of having those come across nicely. Let me see if I can find something else. It does look like two A's, doesn't it?
Yeah, it looks like merchandise inventory and A, supplies office. Well, I haven't used these well, it's not merchandise inventory.
Well, you know what? I had the first one wrong because supplies office is A.
No, uncollectible accounts is right.
No, uncollectible accounts is not correct.
That is. According to us, it is.
They both look like A.
They do. All right. Well,
It's not supplies expense office.
well, the one that actually is marked as A is going to be supplies office. Supplies store is marked as B. Prepaid insurance is C. D is merchandise inventory, and E is allowance for uncollectible quotes. So, we will do uncollectible accounts expense first, and then we're going to do merchandise inventory. So we're going to start at the top of our adjustment column and work down. How about that? So we're going to do merchandise inventory. And you can see merchandise inventory is being debited for $1,848.25. And then we are adjusting that into income summary. You need to be on time. The next one is going to be supplies expense store. So we are really going to go down our worksheet. Supplies expense office, excuse me. For $1,448.55. Thanks, Nick. After supplies expense office, you do supplies expense store for $3,248.11. We're just going down on the right-hand side in order. After supplies expense, we're going to do our insurance expense for $11,000. Then you're going to do your two depreciations. You'll do your depreciation expense office equipment first. And that is for $3,410. Then your depreciation expense store equipment for $6,420. And then the last one you do is your federal income tax. So instead of doing A, B, C, like I said previously, starting at the very top of your adjustment column here and just recording them as this is your first transaction, second, third, fourth, fifth, sixth, seventh, and eighth. Starting at the top of your adjustments of your worksheet, listing them then in order. So I feel adjustments are pretty straightforward because they're already done. All you have to do is just get them recorded. What did I do wrong? So that's why I felt we could do 16.1 and 16.2 the same day because 16.1 is pretty straightforward. Let's take a look at 16.2. You will notice that our directions for 16.2 on the very top give you some real directions for 16.2, you will see that they give us the worksheet again. So you can see this is the same worksheet that we were working on for Work Together. But up here in the very top, they give you the order of your closing entries. What you need to realize is you have to then know what they close into. Okay, so it tells us to record the following closing entries. Close the income statement accounts with a credit balance, close the income statement accounts with a debit balance, close the income summary, and close the dividends. Now, dividends is like our drawing account from before. Now, it is a little bit easier when we do closing entries because we truly look at this section of our worksheet here. Anything that has an amount in our income statement column has to be closed because those are temporary accounts. Our permanent accounts are going to be on our balance sheet because our balance sheet is our accounting equation. Accounting equation, those accounts never get closed. So when we work on this section of it, we need to look at this portion of our worksheet, and we have to remember the purpose of closing entries is to get an account to zero. So when I look at this account right here, I can see it has a debit balance of $97,458.84. If I need to get this to zero, what do I need to do to it? Credit it. If it has a debit balance, to get it to zero, I will credit it the same amount. We will do these first two closing entries here, close the income statement credit balances and debit balances. Those two, you are closing them into income summary. Okay? So when we look at this, I have to close my credit balances. So what, if they have a credit balance, what do I need to do to close them? Debit. So therefore, what's going to be credited? Income summary. Now, when I close my debit balances, those need to be credited. So what would I debit? Income summary. You are going to find when you do your adjusting entries, at the bottom of one transaction, at the top of the next transaction is going to be income summary repeated twice. You do not know the balance that goes into those accounts until you have all of those other accounts listed on there, and then you will add them up. So you always have to calculate the amount that goes into income summary. But truly, when we go through and do this, what you need to do on your worksheet is have up that portion that you can see the balances in your income statement columns. And then we, again, purpose of closing entries is to get them to zero. Let's work on that. We do not have source documents for closing entries because we are going to put the word closing entry at the top, and we are doing this as the last day of the fiscal period. So what I need to do, looking at my income statement columns, I don't have anything on the very first page of my worksheet, but I do on the second. My first one that has a balance is going to be income summary, but am I using that one? No. So I have to go down to the next one, which is going to be my sales. So I'm going to put in sales, and sales needs to be debited $430,521.58. Next, after sales, is going to be purchases discount. I am truly going down my income statement credit column. I will have purchases discount, then I will have purchases, returns, and allowances. Purchases discount has a balance of $345.25. Then I'll have purchases, returns, and allowances for $5,548.74. I am closing that into income summary. So I have income statement credit column. I know there's 4 because there's income summary, but I'm not doing that one because this is part of an adjusting entry. I need to close these 3, so I debit them. I need to add those 3 numbers up. The total of those 3 debits is going to be what I put into income summary. And when I did it, I got $436,415.57. Now I need to do my second set of closing entries. And for this, the directions tell me to close anything that has a debit balance. So in order to close those, I have to credit them. I need to first put in the account of income summary. But I don't have a number yet. I need to leave it blank. I now need to go through and list all of my accounts, starting with sales discount, and sales discount should be credited $215. Below SIS discount is going to be sales returns and allowances for $4,153.28. Purchases for $174, $481.20. Advertising expense for $6,000. Cash short and over, $4.84. Credit card fee for $5,148.25. Depreciation expense office equipment. Depreciation expense store equipment. Insurance expense. Miscellaneous expense. Payroll taxes expense. After payroll tax expense, we have rent expense for $12,000. Salary expense for $97,458.84. Supplies expense office for $1,448.55. Supplies expense store, getting from my worksheet in the income statement column, $3,248.11. Uncollectible accounts expense for $1,500. Utilities expense, $5,648.40. And the last one, federal income tax expense, is going to be for $19,948.91. Now, I have lots and lots and lots of credits. I have to go through and add up all of my credits to get how much I close into income summary. So you need to go through, do some math, and add it up. Did anyone find a shortcut to adding it up? Say it again, Nick. If you look at your total on your worksheet, for your income statement debit column, it's all the same numbers. Why could we not do that for income statement credit column? Because income summary is on here. Now, I do have to warn you, income summary could either have a debit or credit balance total, so you want to watch whatever one income summary is in, you cannot use those totals. Okay? So I did give you a shortcut, barring that you didn't make a mistake entering in those numbers. And I know you wouldn't do that. Or I wouldn't do that either. Now, first closing entry, closed debit balance. Second closing entry, closed credit balance. What's our third one? Income summary. Now, this you just need to remember, and I need you to look at me because I want you to remember this because this is going to be the most common question on the test. Eyes up here. Eyes up here. Don't make me sing. Okay. Third closing entry is closing income summary. How much is income summary? Right here. Net income. Okay? So you just need to realize for your third closing entry, you are closing the balance of your net income into your retained earnings. Retained earnings is like our capital account. Now, if we have a net income, we need to credit retained earnings because it's going to increase the value of our stockholders' equity. If we have a if we have a net loss, then we need to debit it. I'm going to tell you that we're going to have a net income on most of our corporations. Okay, so for this one, this third closing entry, we're going to do the date of the 31st. And we need to debit income summary for our net income of $73,283.19. And then we are going to credit retained earnings. That is like our capital account for $73,283.19. That's the whole reason we're in business, so our retained earnings goes up. And it is the value of our net income of $73,283.19. Your last closing entry, this is the one that students get wrong most often. Is closing our dividends. Line 27, right here in our worksheet. Okay, I'm closing dividends, not dividends payable. Dividends payable is a liability. Liability is a permanent account. This account, dividends here, is very similar to our drawing account. We keep track of it to find out how much money we are paying out to the owners. You will see that dividends has a debit balance of $16,000. Okay, so if it has a debit balance of $16,000, what do I have to do to dividends? Credit it. What account am I going to close it into? Retained earnings. So retained earnings is going to need to be debited. You'll see that I have a series of assignments turned on for you throughout the week. I do have for tomorrow your application problems 16.1 and 16.2. I am done teaching for the day. It is truly going through and recording your adjusting entries and your closing entries. I do have your study guide turned on for Thursday, and I do want to point out is I'm going to be done teaching the chapter tomorrow, and then we're going to have some work time. You need to ask me questions. Seniors, you are going to be having a test you can see next week on Tuesday. I don't like to do it after the long weekend. I do also have an assignment set to be due the Monday of Memorial Day at 11 p.m. because we don't have school next Monday. You will have some class time to work on it, but it is going to be a bigger assignment. You will find that applications 16.4 and 16.5 are a little bit bigger. They will be turned on later on this week, but I'm giving you that as a heads up. And I'm not saying that I expect you to work on it over the weekend, but some of you may need more time, so that's why I have it due Monday night at 11 p.m. Okay? At any point, if you want to start working on your study guide, which I have to change something, you can certainly start doing that.